In 1954, Gann had put out a small booklet. At that time, he was 76 years old, a couple of years before his death. He wrote a little booklet called Why Money is Lost on Commodities and Stocks and How to Make Profits. And in that book, he had made a comment where he had made his greatest, or one of his greatest mathematical discoveries for predicting trend of stocks and commodities. So on August 8th of 1908. So it's interesting that in that time period, the month was 8, the date was 8, and the year was an 8, in the 8th year of the decade. So looking to find that great discovery, I had some ideas and was able to piece something together that works pretty good. And what that is after this top came in on the crude chart, looking for where that swing would terminate and then start an upward move. Because Gann was noted for these predictions of, we're going to hit a certain price by a certain date. And I think this is the calculation that he had to do that, because I've worked this over and over and it works out pretty well. You have to consider your decimal floats and octaves to work this principle. Anyway, with this particular method, I was able to get a price target and a time target. My price target is at the blue horizontal line, and my time target is at the green arrow. So you can see on that particular day, we opened here, started to move down, and we hit the price target. We breached it a bit, and then it roared back up and closed higher than the open on that day. So this, at that particular point, we're expecting a reversal then after that point was hit. So what happened, we got an open just above that close that day. We got a couple of days down because we retested the low, made a false break, and then the price action immediately reversed and started to move out of there. Sometimes you'll get a clean move right at time and price. Sometimes you'll get a bit of a breach and then it will reverse, and sometimes you'll get something like this, a bit of a breach with a retest and then a reversal. Sometimes the price target will reverse early before the time target is hit. And that's fairly common, and that's why one of Gann's principles was I can predict a certain price level within a certain amount of time, and this is what that is. So this calculation was made off the prior price action leading up into that high. One thing that you have to really consider with this is you've got to look for pattern and structure to be able to look for termination points. You wouldn't want to be looking to use this on small internal swings like we have here. It will work, but you got to be a little bit more careful. But when you're looking to predict the bigger swing moves, it's very effective. Like to project, say, this swing up, and then to project this downswing, you can, but you're going to have multiple target points. And then say something like this, these little minor swings inside the trend. This is not what this is for. This is for getting your more significant swings in the market structure. Consider, think like in Elliott terms of you know, 3, 5, 7 waves or ABC moves. So you want to be looking at this in the context of, am I inside of, is at the end of a bull market, I'm looking for a bear market to start, or am I just mapping out a corrective swing to the prior swing? So you've got to take your pattern into context, but this works phenomenally well. My prediction was, coming off this high, where can this go? Well, it went exactly to my price level and my time target right here on that date where the arrow is.